Addressing the ongoing debate of lengthening cycles and diminishing returns, today we will be going over how much longer could this cycle potentially go, or maybe it's even done already, and potentially how much more returns could there be had. With that said, welcome back to EllioTrades channel. I'm host Krown again today with some good old TA. Fixed my computer back here, which I'm very happy about, and got my regular eyes going on here too. And I want to preface this whole conversation by saying, first and foremost, thank you for all the support on this channel. It's been amazing. It's been really, really cool to see. Really do actually take that to heart, and it's just awesome, man. Anyways, more importantly, pertinent to you, understand that when we're talking about this more long-term analysis, this is interesting, but it's only relatable if we come up with something that invalidates it and something that actually validates it as well. So I want to really differentiate this particular video from all of the other lengthening cycles and conversations going on across the web, because a lot of them, from what I see, are opinion-based and not fact-based. And I want to do this with as much data possible and make it as relevant as possible as well, because otherwise, what's the damn point? I mean, I get it. Like, people want to get views on YouTube and everything. Cool, that's great. But we can get views on YouTube, but also put out, at least in my opinion, hopefully some useful information. And of course, let us know what you think in the comment section below. If you even feel so inclined, please consider liking the video as well. And let's get into it right here. Okay, so I'm going to start off with just this indicator. And what is it? It's the Bitcoin log curve zones. We've actually alluded to it in a prior video, essentially just fitting a log curve onto our current history of this asset. And we are going on the longest running chart possible for Bitcoin that goes all the way to the Genesis. Okay, beautiful. So what we're first going to do is we're going to prove whether lengthening cycles is happening or not, and diminishing returns as well. And let me explain what the whole hypothesis is. And to be fair, I actually agree with the former one, certainly, in the sense that lengthening cycles refers to the concept that over time we can expect that the market cycles, these boom and bust cycles from essentially the all-time low to the all-time high, will get longer and longer as time transpires. And there's a logical and intuitive reason for that. More theoretically speaking, we'd expect that as the market matures, more people enter into the market, and with more people entering into the market, that means more theoretical orders in the order book, and with more orders within the order book, that means there's more congestion, and it would follow that it takes more equity to move price action, thus making it move slower over time. Okay, I think that makes complete sense. That's been very consistent with my experience in other immature assets as they mature over time. And I believe that that's what we're seeing right here on Bitcoin. Diminishing returns refers to the fact or the idea that over time, each and every one of these cycles will produce less and less gains. Okay, so I'm going to throw on my drawing tools right here. And what we're going to do is we are going to define a cycle by the lowest closing price and the highest closing price. The lowest closing price must be within the green zone of this. The highest closing price must be within the red zone. And as you can see, we have 1, 2, 3 completed cycles thus far, and we're working on number 4 over here. Okay, so let's measure out this first one. Let me also explain. I have put these vertical lines to represent essentially those pivots on price action. Anyways, this first cycle from beginning to top is 322 days and about 37,750% gained. Okay, interesting, right? But that's not interesting without understanding the next one, which we will do right here. So we're going for this cycle, starting in our lowest closing weekly price was actually here, not here, even though it did wick lower. It was not a lower close. It's technically a higher low, in fact. Why it's very important to understand these things too. Anyways, I've already done it. And this next cycle from bottom to top is, and sorry, this one, I apologize. It's actually starting over here. I'm getting ahead of myself. But this low over here to this high over here, and I should actually mark this one off. There we go. Beautiful. This one is 742 days long and 46,000% gained. About, I did round this to be fair. And as you can see, 742 versus 322 is about 2.3 times longer. So a little bit more than double, essentially. Okay, let's do the next one starting with our lowest closing price in January 2015, resulting in the $20,000 high in 2017 December. And how long do you think this one was? 164 days, about 9,000% gained, and this one was 1.43x longer than the prior cycle. So already we do see that the cycles are obviously getting longer over time, but the rate at which they're getting longer is actually diminishing a bit. Now, to be fair, we only have 3 iterations right here. 3 times does make a trend and should theoretically be okay, but I do want to address that point as well, as it's going to be very important heading into our next point right here. Okay, so now we're going to take the low of our current cycle, which is in December 2018, at about 3,100. And so far, we do not have a high. How do we define a high? Well, again, we really want to see it get into the red zone, but this is where I'll offer up that invalidation condition. If Bitcoin does reverse on the weekly, meaning that it comes back down below the last weekly high or low at $44,000, everything we're going to talk about from this point is invalidated, it is irrelevant, and it is not what is going to be happening. And for what it's worth, Bitcoin would probably play out a really nasty downside move after that, in my opinion. But for now, it does hold true, so that validates it for the time being. And from bottom to top thus far, it has been exactly 1064 days, exact time of the prior cycle. And so far, we have around 1,900% gained from bottom to top. So, are the returns diminishing? Technically, no. If we go by the data, these first 2 had actually increased by a rather substantial margin. The next cycle dropped off tremendously. Personally speaking, I think that you're probably going to see that trend continue over time. I do not think that Bitcoin's putting in 40,000% moves in a cycle any longer, because that would mean that Bitcoin would go to such a high number that you should be worried about the health of the world rather than the health of this asset, as it goes up to, like, I don't know, hundreds of millions of dollars, or even tens of, or even $1 million. I mean, think about what the world would look like at that point. You probably don't want to be the only person who has money in that world, because it's not going to be a very pretty world, man. You don't want to be the last person surviving in an apocalypse. Just saying. Just saying. I'm ending it before there. That's all I'm saying. And of course, our returns thus far are certainly an outlier compared to all of the previous cycles. Really not even comparable to the 9,000% gain right there. Okay, so all of this is very interesting. Now, let's make a theoretical relationship here. We know that over time, these cycles are getting longer thus far, unless if this literally is the high right here, at which point they're exact same, but I don't think so. At least for right now. Again, invalidation conditions, very important to understand. A quick change of clothes here, as I had a sauna thought and I wanted to expand on now exactly where I would estimate, given this information, given this data, essentially where the potential end of this cycle very well may be. So here's the assumptions. Again, we have our first cycle, 322 days. Second cycle is 742 days, and the third cycle is 1064 days. And of course, our current cycle is 1064 out from the previous macro low. With that said, our second cycle was 2.3x longer, or 130% longer than the previous cycle. And the third cycle was 1.43x longer, or just 43% longer than the second cycle. So for this third cycle, I'm going to estimate it's going to be somewhere between about 20 to 40% longer. The assumption here is that, of course, we continue to see the cycles lengthen, and the cycles are lengthening at a reducing pace as time goes on. Here's my assumption right here. And as you can see with these vertical bars, that would be about where we would be looking at. So just to put a nice clickbait title on this, we'd be looking somewhere in potentially as early as May of this coming year, 2022, and perhaps as late as September 2022. Somewhere around those times, perhaps, is where we very well may be looking. Again, assuming that all of these assumptions are true. Could it be a little bit more than that? Certainly. Could it be a little bit less than that? Certainly. Well, but I think that this gives us a generalized idea. Now, what we can do with this here is we can take it one step further with now entertaining potential highs, or sorry, the high marking price for this cycle. Again, all cycles have marked their top, their macro cycle top that is, by hitting into the red zone of this Bitcoin log curves indicator. And with each and every passing week, one more pixel gets added to this indicator and it naturally rises alongside the bottom side as well. Everything gets pushed up a little bit. So what I'm going to do here is I'm going to do a very bad drawing. I'm going to do a very bad drawing, kind of estimate where we'd expect this to kind of be around those times. Something like this, as I carefully do it. Beautiful. All right, now where did that lead us up toward? Okay, the ending definitely got biffed up there. Let's try that again, maybe. Sorry. Okay, all right. It's a late day for me, by the way. Usually I'm wanting my day by this time, but there was too much more information that I had to get on. So, okay, let's give this one more time. There we go. All right, well, it's going to be more of a regression, but it'll get there. And there we go. Okay, something like that, right? All right, let's take this one step further now. So I believe I've shown this on this channel before. If not, what I'm going to do now is I'm going to plot some fib retracements from all the macro cycle bases, and you'll very likely notice a clean interpretation of where the next mid-cycle lows are and the highs after that. Anyways, let's start it off with this one right here. What do we see? Actually, this is not proper right there. It is right there. Sorry. For whatever reason, that one was not on the mark to right off the bat, but that's okay. Anyways, more importantly with this, what do we see? So I'm taking a fib extension from the cycle, from the macro bottoming area right here. Mid-cycle low is right at the 1.272, and between there and the 414. And then we find our highs between the 2.414 and the 2.618 Fibonacci extension right here. Okay, interesting, but not very useful in and of itself. So let's draw another one for this next cycle right here, of which, where's our next mid-cycle lows in 2013 at the 1.272, in between there and the 414 actually. And then where do we find our highs? Between the 2.272 and the 2.414 right there at the edge of the red zone. Okay, cool. Starting to sound familiar now. Let's go into the next one for this macro cycle base. And yet again, our mid-cycle basing was right here at the 1.272, between there and the 414. And where do we find our highs? Between the 2.272 and the 2.414. Okay, let's do the same thing for our current cycle and see if that matches up with any of these targets over here. And what do you know? Let's actually, do actually have this exactly right. The smallest change makes like such a big difference actually. So something like this, if I go off a closure, it's just like literally one more pixel there. There we go, lovely. Like that. Okay, beautiful. I think we got it exactly right now. Okay, and where's our mid-cycle lows thus far for all that we know? At the 1.272, between there and the 414. And if we were to get rid of that and follow this, let me actually move this away. There we go. You can see, do we want to move this? Oh, Jesus, now I'm messing it up, but well, I think that's about right. That is about right. Okay, beautiful. And where do we see the 2.272 and the 2.414 meeting up with these presumed time ranges over here? Well, that would be between about 166,000, about 167,000, to all the way up to 200 and almost 14,000. Now, of course, if the cycle goes on longer, this will naturally get higher and higher. And if it's shorter, it'll be a little bit less than that, somewhere around like maybe 140 to 150,000. So I thought that that was rather interesting right there. Again, please understand where the invalidation is, because if Bitcoin does come back down and invalidate, or not invalidate, but take out the prior weekly higher low at $44,000, then this is no longer a main idea of what can and possibly will happen over time. As a trader, I don't care about any of this. I'll put it just straight up to you. I don't care about any of this as a trader. This is way too far away. Yeah, it's interesting. Yeah, it makes me want to, drum the boo law beats a little bit more. But, you know, I really don't have any reason to be trading anything under a daily for my personal purposes. These are obviously preferences. So let's talk about something a little bit more relatable here before we sign off. This video is already 13 minutes long. As well, I don't want to leave you without anything like actionable right now. I do want to address this. Hey, Bitcoin right here, while it is above $60,000, and that is generally good, I do want to go on record as saying, as we approach this new week, because I don't know when the next time I'll do a Bitcoin specific video on this channel. Obviously on my channel, I do them every day. But if Bitcoin does come back down below $60,000 and close a daily below there, that's a major warning flag, not a death sentence in and of itself. However, if this coming week, Bitcoin does start to move its way back down below about 58 to 58,500, I think that you're going to see a very, very nasty continuation move, very likely down somewhere around $50,000 territory with a bounce likely at about 54 or 55. Now, a lot of people are kind of talking about this as well, but I think that they are being a little bit too optimistic in the resolution of this if it does come to the downside. As I see a lot of people talking about 52 to 53 as being the next low. Don't think that things would be that easy. I do think that they would come further down. The leverage positions and the leverage ratios are astronomically high, the highest that they've ever been in this asset. And of course, you know where I'm going to go with this one as well. The BBWP on the daily is absolutely crushed. Volatility is programmed, and if I had to guess, it probably expands this next coming week, probably around the end of the week to be fair. And I also want to be on record as saying, as long as Bitcoin is especially above 60,000, but even as long as it's above about 58.5 as well on a daily closure, I am biased towards an upside resolution, especially above 60,000 bucks. Below 60, I'd go more neutral than anything, I suppose. So yeah, as long as Bitcoin is closing dailies above 60,000, I am bullishly, I suppose, biased. As what do we have right here? I mean, we do have essentially an ascending triangle being built right now. That's valid as long as you're above $60,000 territory and confirmed above about 63,400 on a 12-hour closure with targets up towards 70,000 bucks and beyond. Anyways, I think that addresses everything that I wanted to get on this video. A little bit longer. I apologize about that. But I thought it was an important one nonetheless. And I should also let you know, of course, I have my own channel at Krown Crypto. There is a link in the description below. We go over Bitcoin every day and do some altcoin analysis as well in live stream formats. You're more than welcome to join it in. It is a little bit more rated R, I suppose, but again, never bad intentions, just having some fun. But I do want to warn you of that because I know that some people have families around and everything, and maybe you don't want your children exposed to that. Maybe you don't want to be exposed to it. Who knows? And then also, we obviously have our Bybit link as well in the description. Please, I want to be so adamant about this. If you are not an experienced trader, if you don't feel confident, if you don't have, prior history of success, do not, I repeat, do not leverage trade. Probably don't even spot trade either. What you should do if you want to learn trading is you should first reference, some sort of catalog of ideas and strategies, probably YouTube as they're free. I have plenty of free resources on my own channel, and then back test those strategies and build your own off that with a testnet or paper accounts so that you do not risk any finances in the learning process. That is really, really important. For the people who do have experience, well, go take advantage of the link because it's going to give you like a deposit bonus. So it's like free money. And I think it also reduces your trading fees as well. So all good. Anyways, I think that's a good place for me to sign off. Take care, and I'll see you in the next one.